Hi guys, welcome to another episode of Global Money View. My name is Ola and I basically talk about finance, money, investment, personal finance, the economy and how it affects you. So in these weekly sessions that happen every Saturday, 9 a.m. GMT plus one, we'll be talking about things that have happened in the economy that affect your pockets. And I'm going to be breaking down in simple English. So in case you haven't already, please subscribe to my channel. Yes, subscribe and hit the notification button because we have a lot of financial education content coming your way. The first thing we're going to talk about, like we always do, global, then Africa, then Nigeria, my home country. So the first thing in the global news is that the International Energy Agency forecasts glut in oil production in 2025. Now, what does this mean in simple English? They are saying that there's going to be an oversupply of oil. Now, what does that mean for you as an investor, as an individual working on the streets, wherever you are in the world? Because trust me, it has an impact. Energy drives the economy. Every economy of the world. There are different sources of energy. There's oil, there's coal, there's alternative renewable sources, right? But what they are saying is that there's going to be a glut in oil production. That means is that based on their expectation, oil prices are going to come down in 2025. Now, what does that mean for you? If you are in a country where where there's a dependence on oil sales for public revenue, or if you are invested in an oil company, or you work in an oil company, then it might be that slowdown. Do you get uncertainty, bumpy ride? You have to put alternative sources of revenue. So that's coming. Now, for you as the individual, if you are in a developed economy where the cost of energy goes up and down depending on global market prices, then you might find that your energy bill will come down. So yes, if you were thinking of maybe like bulk buying at a certain price, maybe at the start of the year, you might want to say, okay, let me do 3 months and let's see, because based on what they're saying, there's going to be an extra $1 million daily, 1 million barrels of oil being produced daily. Was it 1 million or 1 billion? If we need to confirm, but there's going to be an excess supply of oil. Now, where is this coming from? I think this is where politics, governance ties into real life. One of the reasons why they are postulating President Trump, the incoming president of the United States, is pro-America producing and being energy independent. So they are going to ramp up on shale oil. Like if you were in the markets 7-8 years ago, shale oil was such a thing, and shale oil was what was kicking on everybody else. No matter what OPEC tried to do, shale oil always determined that prices will come down. Now, what is shale oil? Shale oil is the type of oil that is produced in America, and so an increase in supply of shale oil is going to push global market prices down. Why? Because they would not be buying as much from external markets. So those people have to find somewhere to there'll be supply that is not being used. And then also because they will also want to keep it within their ecosystem. So nobody's buying outside of the, not like nobody, there'll be reduced demand basically for other oil sources and all. So what are we saying? Politics, governance is flowing into economy. Now, if if they actually are able to ramp up shale oil production, FYI, shale oil. Okay, I already said this is the type of oil produced in America. If they're able to do that, then we know what's coming. So brace up. If you are in an economy where there's a dependence on oil, and if if you are invested in oil businesses, and your energy sources, your energy cost might actually come down. That's one thing that might be good for you, depending on where you are in the world. And especially for people that are like, okay, fuel price is tied directly to oil price. Yeah. So that might be a good thing for you, depending on the economy that you're sitting in. Another reason why there might be a glut is because China is moving quickly to renewable energy sources, alternative energy sources, and so they are reducing their demand. So those are the things that are coming. So we need to watch out for them and be guided as individuals, because these are the things that actually do affect the economy globally. So that's that. Then on the back of China, like we ended with China, let's continue with China. So China is heading towards a 1 trillion trade surplus. Oh, I didn't pop that up. China is heading towards a 1 trillion trade surplus. What is a trade surplus? Basically, for a country, there's something called the balance of trade. Your net imports is how much you are sending out of your country. No, how much you are spending out of your country. So you are buying external currencies or foreign currencies, and your net export is how much people are sending to your country to buy your products. So China is at about 700 billion dollars in positive income to the country, meaning that their export is more than their imports for this year, up to about 700 billion dollars. So they are heading towards the 1 trillion mark in terms of trade surplus. Now, what does that mean? It means that everybody is buying from China. It means that China is well positioned. It also means that China is doing very well when it comes to trade. Yeah. But what does this mean? If you've seen in the news where President Trump is saying they're going, or even President Biden actually started with increasing tariffs on China produced goods, it's because of things like this. Why? Because China is cheaper. So if I could produce an EV in China and export it to America, I can match up with Tesla, and I would sell because people want EVs, but Tesla is expensive. If I can buy the same value for half the price, 30% of the price, why not if not? And consumers are beginning to make those decisions. So one of the things that the government of the United States is trying to do is to preserve their economic security by increasing tariffs on China produced goods because they always come cheaper. Does it help the people on the streets? I'm not sure. Like, we have to think it through. Well, it's one of those fine things where, like, we are not sure who is benefiting from this. Is it just the businesses, or is it the people, the actual taxpayers in the country? But that's a debate for another day. However, what do we think is going to happen? We think that President Trump is also going to increase on the tariffs. I think he has already alluded to that there'll be increased tariffs on China produced goods. But guess what is going to happen? If that really happens, then what we might find is that China might devalue their currency. Well, let me say it in simple English. So imagine if $1 was 10 Chinese yuan. I'm not sure what the pronunciation is. Imagine that was the case, right? And then there was a product, a phone that you could buy for 1 Chinese yuan. So you would have 10 for $1, right? So what they're going to do is that they would make $1 produce 20. It might not be that's 100% valuation. That's quite extreme. But just for ease of math, right? 20 of that, right? So that it still is cheaper for you to buy from China than for you to still produce in America or buy from America. So if you've heard of the US China trade war, this is it. So if I to send their own, China will respond. So if you've seen, I remember this clearly when President Obama was accusing China of distorting their exchange rates to favor them. This is it. This is generally supposed to be one of the benefits of a devaluation. However, if you're not producing, then you don't get this benefit. So what's going to happen is that people will naturally flow to you because something that is 1 naira in Nigeria might, when you convert it to Chinese, you might be able to get 4 for that same 1 naira they are playing, and it's working for them. Why? Because they have the population and they have the technology. And I think I'm back. News. Oh, I see some people online. Okay, I'm back finally. That's so stressful. Technology, resource, infrastructure issues. Yeah, but we move. Please confirm that you can see me. I see some people are still online. Apologies for the break. But let's move on to Africa news. So in Africa, we are going to be discussing Access Holdings. Now, Access Holdings is a country in Nigeria. It's a company in Nigeria. It's a bank, it's a financial institution, so it has in its under its subsidiaries, it has banks, it has pension funds. It's a massive financial institution, and basically what they have been doing over time, like we've made like maybe 3 or 4 announcements in this year alone of them acquiring a bank in one country or the other. So the latest purchase is that one of their subsidiaries, Access Bank UK, has purchased a majority stake in a bank in Mauritius. Now, why are we highlighting it? Because Access Bank, number one, is listed in Nigeria. It's a Nigerian stock, and then it also has like a GDR. Like that's another finance techie explanation for the. But it has a GDR in the London on the London Stock Exchange. So basically, the stocks in Nigeria are somewhat listed in a fancy way on the London Stock Exchange, but basically it's a Nigerian company. Now, what does this mean? For us, it's just wanting to highlight the impact of the economy on any business. So, based on size, based on reach, based on everything you can imagine about Access Bank and the strides that you are making, Access Bank is a massive institution. It is a mind-blowing institution, and the rate at which they are growing is amazing. Like you need to give it to them. They are growing, right? However, Access Bank is listed in Nigeria at 24 naira per unit of the stock. Right now, I'm not going to go into how many stocks they have on offer. They just did a private placement. They just did a rights issue, rather. They just did a rights issue, did some dollar capital raise. They've had that for a bit. They have a perpetual euro bond. Basically, they are well funded, right? But if you compare price for price and you go and look at Standard Bank in South Africa, right? Standard Bank. So yes, we cannot do like for like exactly, but just looking at the pricing on the stock market, like you literally cannot compare Standard Bank with Access Bank. Yes, there's more analysis to it, but in terms of stock price growth for the investor, and then that's basically because number one, there is less foreign investment in Nigeria generally, such that the stock market is impacted. That's one. And then in dollar terms, that price that even local investors are seeing and they are taking part in is not necessarily growing, because as they are moving forward, currency is pulling them back. So one of the things that you need to consider when it comes to investing is also the economy in which you are investing, because I dare say that to a very large extent, the devaluation of the naira has highly impacted the value of Access Bank in actual real terms, even though they are growing, even though they are massive, they're doing a lot of hard work. So for Access Bank, maybe they should consider listing somewhere else, which might be tough because of IP address issues. But in terms of unlocking that value, it seems like if the economy doesn't correct, you might just feel like they're growing and they're doing amazing work. But that value in terms of stock price revaluation, correction, appreciation to reflect the hard work and the growth of the company might just not be there. So, like I said, as an investor, whilst we're looking at these things and we can see that they are doing an amazing work, you also have to consider the economy, the currency, the growth that is expected in that economy, and understand that if you put a seed in good land, but the weather is not good, there's a chance, a high chance, more than the fact that the soil and the seed are good, that the product or the seed will not grow well. Yeah. And then so that's African news, and I think it's also important to highlight, while as I'm shutting down from that, that Access Bank is actually establishing itself as the bank for Africa. Like they are pam pam pam, and they will support the Africa Free Trade Agreement well, based on their current positioning. So well done to everyone on that team. You guys are doing an amazing job. And then finally, Oh, just before I go to Nigerian news, just to highlight that this is powered by the Money With Club, and I'm the founder of the Money With Club. If you've not heard about us, let me drop our website. Yes, please check us out. And also subscribe to our free newsletter, at least for a start, to know what we're all about. Yes, and then also I'm resuming my weekly education content on YouTube. I used to do that a while back. I took a break, but I'm coming back. So if you have any questions you'd like me to discuss, please drop it in the comments. I'm happy to jump on it and all. And then finally, the Nigerian Federal, what's it? Is it Federal Economic Council? Where is FECA? Let me check online. What does FEC mean in Nigeria? Somebody should drive. Federal Executive Council. I'm sorry. It just disappeared from my head for a split second. But the Nigerian Federal Executive Council has approved 47.9 trillion budget for 2025. Now, as of yesterday night, it was proposed. And then this morning I woke up. I'm like, oh, it has been approved. Now, the first thing is that, okay, our budget last year was about 27 trillion. So there's like almost 100% jump. But calm down, calm down. In dollar terms, it's not really that much because the exchange rate has gone on a leap dive, if you understand what I mean. So basically, what we're saying here is that first, the federal government, whilst the budget has significantly increased in naira terms, it's important to first of all highlight that it's not that much of an increase, because numbers look whatever, but it's just reflecting how bad the currency has, um, what's it called? The currency has devalued in that period, right? But then what should we be looking at? Um, the what's it called, the assumptions. My brain froze for a split second, but the assumptions, they're assuming 2 million barrels a day, which we've not done. $75 per barrel. We've already said that international energy agency is saying that oil prices are going to come down. That's the expectation, and that's the general expectation based on everything that we can see. And then they're assuming 1,400 exchange rate. Now this is the one that we know that is not necessarily bad. Why? Because it means that if exchange rate is above that, then we'll have excess crude that would be excess crude revenue that will be transferred to what's it called, the NSIA, the Sovereign Investment Authority, right? So there will be some investments for the country. So that's not entirely bad. Now, all these assumptions is what's going to make the budget real. Now, if you understand that the current plan, the one that's in the budget, is that they're going to borrow 30% of this. And then we're now saying that the plan for them to make money, meaning that 2 million barrels per day cannot work, $75 per barrel cannot work, then what is telling us that 30% can easily go to 40, easily go to 50, let's just be dancing around with numbers. But what are we saying? There's a limit to how much you can tax and increase taxes in a shrinking economy, right? People are losing jobs, companies are struggling, and then interest rates is high. Inflation just came out at 33%. So that inflation is not just a number. It is impacting real people, right? It's impacting real lives, and it's going steady at this rate, right? So what does that mean? It means that if prices were 1 naira last month, is going up to 1.3 ish, compared last year. What month are we? We're in November, October last year, right? Compared to this year, October, right? It has gone up by that amount. Now, what is that saying? It means that things are not easy for everyone on the street. So there's a limit to how much the government can actually borrow. So they need to be creative in their revenue drive, because people are already tired. I'm not sure what the next level of tired looks like, right? Such that this budget, whilst I agree that in dollar terms it is actually a budget cut, it's actually a budget cut, because it's actually a budget cut. So last year's budget was about 336 billion ish, in dollar terms, and this one is about 20 something in dollar terms, right? So it's a budget cut standardized in dollar terms. However, in naira terms, it's significant, also because our foreign revenue is quite low. So what are we saying? That 2025 is going to be a year. It's going to be a very interesting year. And whilst interest rates are high right now, based on the current plans, it doesn't appear that there will be a basis for them to cut it in 2025. Also because oil prices are expected to come down. Also because we have a new leadership that is in America, the country of the world, that is pro make America great at the expense of everybody in the world, right? There's no big brother happening right now. Everybody wake up and sit up and do what you need to do for your own people, right? So that being the case, if you are in Nigeria, running business in Nigeria, doing stuff in Nigeria, you have to actually tie belt. You have to be very, very intentional. And for people in the club, if you're in the club, we're going to be discussing our strategy and positioning for next year. Why? Because you actually have to like position yourself. You actually have to look at the things that will thrive and position yourself there. There's no room for carelessness, no room at all. But yeah, thank you so much. Have a beautiful weekend ahead and see you next week. Don't forget to share